This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Disappointing delivery. Shares of UPS tumble. The company warns its fourth quarter profits won't be what many expected, and the reasons may sound familiar.
Get out the vote. That's what they're doing in Greece, and investors will be paying close attention to the outcome of Sunday's elections.
Plus, higher education. President Obama is proposing a change to the way millions of families save for college. A popular savings vehicle could lose some luster. All that and more tonight on Nightly Business Report for Friday, January 23rd.
Good evening, everyone. Three things that we've been reporting recently came home to roost today: the strengthening dollar, gridlock at West Coast ports, and falling oil prices. At the center of those issues was a company almost everybody knows, UPS, and it wasn't good. Shares tumbled nearly 10%, making it the worst performing stock on the S&P 500. After the parcel shipping company, closely watched because it's viewed as a barometer of the health of the economy, warned investors to expect weak fourth quarter results. The reasons? Unfavorable currency rates, volume fluctuations because of those West Coast port disputes, and those low oil prices, well, they aren't helping as much as many believed they would. And that wasn't all. Morgan Brennan reports.
United Parcel Service delivering some bad news to investors, slashing its fourth quarter earnings forecast. The problem? UPS spent a lot of money to successfully deliver holiday packages on time and avoid a repeat of Christmas 2013 when millions of packages were delivered late. But it did so at a big hit to the bottom line. Analysts say the shipping giant overcompensated.
UPS for some time now has been using price as a weapon to try and maintain its market share versus FedEx on the ground in the U.S. One. Two, they overspent guaranteeing service. They certainly couldn't have a repeat of last year's service disaster. And so you combine those two events in which you're not really seeing any improvement in yield and you're spending ever more to deliver those packages, and you get a big earnings miss.
UPS said the added capacity was necessary to handle the, quote, extreme spike in package volume on its two busiest days. But demand was disappointing on others. That resulted in a costly decline in productivity. Also, delays at West Coast ports had an impact. But UPS also cut its guidance for the full 2015 year, citing pension costs and currency headwinds. All of this sent shares of UPS plunging 10%. But it doesn't stop there. Shares of rival FedEx fell in sympathy as well, despite the fact that FedEx reaffirmed its own fiscal 2015 forecast. So the question now, if UPS experienced slower than expected demand, where did that market share go?
We saw this happen before. Back in 2005, UPS had service issues, and in 2006, you saw outsized gains in volume by FedEx as a result. That's the way it works.
But don't rule out the Postal Service either. The USPS surpassed its own package volume forecast, setting a new holiday season record. For Nightly Business Report, I'm Morgan Brennan.
Well, the strong dollar and falling oil prices also impacted General Electric's fourth quarter results, but in a much different way. The multinational posted higher profits and says it can handle currency moves and declining crude in the year ahead. Investors liked that news, and they sent shares of the Dow component up nearly 1% to 24.48. Mary Thompson has more.
Having bet big on the oil and gas industry, General Electric CEO Jeff Immelt sought to assure investors the firm can still deliver as oil prices fall.
You know, our job is to manage the company through volatility. And while we'll see the potential for risk to oil and gas based on current oil prices, we're aggressively working offsets through cost actions and positive opportunities elsewhere in GE.
Those opportunities include what appear to be signs of growth in GE's U.S. healthcare business, strengthen its aviation unit, which makes and services jet engines, and the upside of lower oil for a manufacturer like GE, lower costs. Even the dollar's strength, an issue for a firm that gets 53% of its revenue outside of the United States, is seen as manageable. GE saying it might cost it a penny in profits this year if the U.S. currency remains at current levels against the euro. Crediting the diversity of its businesses, GE stood by an earlier outlook for 2015. The firm still expecting to earn between $1.70 and $1.80 for the year. This comes as GE reported an increase in 2014 fourth quarter profits and revenue, thanks to strength in its aviation and power businesses, which helped to offset an expected decline in its once rapidly growing oil and gas unit. Here's analyst Dean Drey.
GE has about 16% of revenue exposure from oil and gas. It has been one of the growth drivers over the past several years as they invested in this business. But now we're in a position where there are other parts of GE's portfolio that can be an offset.
This helping to offset investors' fears GE would fail to keep recent promises. For Nightly Business Report, I'm Mary Thompson.
Fellow Dow component McDonald's closed out a difficult year. The world's largest fast food chain missed Wall Street's earnings and revenue estimates. And today, CEO Don Thompson warned business will continue to be weak in the first half of 2015. But he also said the company is taking decisive action to regain momentum, sales, and market share. Shares of McDonald's finished the day lower by about 1.5%.
All right, let's get to the markets now. UPS was one of the biggest drags on stocks today, but some news out of the housing market didn't help much either. Existing home sales rose nearly 2.5% last month, but that was a little shy of estimates. All in all today, the Dow fell 141 points. The NASDAQ was the standout. It gained 7.5. The S&P 500, hit hard by UPS, was down more than 11 points. But stocks did manage to post their first weekly gain of the year. Woo-hoo! The NASDAQ was the big winner, rising more than 2.5%.
And as for oil, attention today was squarely on Saudi Arabia, the world's largest exporter of petroleum, and what effect the death of Saudi King Abdullah may have on the energy markets and the current oil production levels. The result was a volatile session for prices, with West Texas Intermediate higher early in the day, only to turn around and erase those gains and close down 1.5%. Brent crude rose slightly. Jackie DeAngelis has more now on the death of the Saudi king and what it might mean for the price of crude.
The passing of Saudi Arabia's King Abdullah was not a shock to the market. 90 years old, frail, and in poor health for some time, King Abdullah had named his half-brother, Prince Salman, his successor in 2013 to ensure continuity. Still, markets reacted on perceived uncertainty as the king's passing does raise some questions regarding Saudi Arabia's influence on the Middle East, on geopolitics, on oil production, as well as foreign relations with the United States.
King Salman was a deputy of King Abdullah for the last few years, and Prince Meghan was the second deputy for the almost same period also. So the element of continuation and the element of stability will be prevailing, no doubt about that, in the foreseeable future.
I think the next generation is going to be very much about looking out for their own self-interest, which you can't blame them for, but it won't necessarily be the kind of happy U.S. interest that we've come to enjoy.
And thus, prices popped.
It's almost as if the futures markets here, we spiked the dollar on the news almost to pay homage to the king, and now we're going to move on to the reality on the ground and the near-term future. The near-term future is for lower prices. That's why I continue to target at least down towards $33, if not lower, for a time.
Even Saudi Arabia's Prince Al-Walid acknowledges that while prices may see volatility, they're not likely to move back to historic levels.
In the medium to long term, it's inevitable that the price of oil may go up a little bit more. But as I said, that I think we'll never see the price of oil again at $100.
So where do prices go immediately? Well, the fundamentals suggest lower. The Department of Energy reporting a weekly build in inventories of more than 10 million barrels. That was the largest weekly increase since 2001. Analysts saying this shows that supply-demand economics will drive this market. And those dynamics show that supply continues to rise even in the face of price declines. And demand from places like China, Japan, and Europe continues to fall. For Nightly Business Report, I'm Jackie DeAngelis.
Now to Greece, where that country prepares to vote in a general election Sunday. Voters won't just choose a new government. They could chart a new and very uncertain future for Europe's most indebted country, and that has investors watching closely. Michelle Caruso-Cabrera reports now from Athens, Greece.
Hello, Mr. Tsipras. What would you like to say to American?
This man, Alexis Tsipras, a self-described radical leftist, looks set to be the next prime minister of Greece. Polls for this Sunday's election show him in the lead by an ever-widening margin. Tsipras has promised to undo many of the painful austerity measures put in place in Greece in the last 5 years. Things like government job cuts, lower wages, and higher taxes, all enacted in exchange for billions of dollars of bailout loans. He and his party refer to it as financial waterboarding. Yannis Varoufakis is one of the party's economic advisors.
Our party's mandate is to renegotiate, to deliberate with our partners, including the ECB, in order to render our relationship with Europe and with ACP to reconstruct the logic of the bailout agreement.
If he wins, it promises to be an international showdown between Greece and its lenders, the European Union, the IMF, and the European Central Bank. A showdown potentially so contentious, it might lead Greece to exit the euro, what is now being called a Grexit. Dr. John Milios, another advisor and a self-described Marxist, insists that is not going to happen.
We are against Brexit because Brexit means devaluation of the purchasing power of the Greek people.
Still, it's clear investors are worried. For most European countries, interest rates are extremely low due to the promise of help from the European Central Bank. Greece's interest rates, however, are much higher, hovering around 10%. Today, Tsipras told me that he represents stability.
For the United States, the message is that for Greece, the next day will be a day of optimism, of hope. I think that the victory of the people on Sunday will be a strong message of stabilization, of progress.
Should investors be frightened?
No.
There's no fear?
There is no fear, there is no threat, only hope.
If the polls are right and he does win, the world is set to find out. Nightly Business Report, Michelle Caruso Cabrera, Athens.
The talks in Havana continued today as the U.S. and Cuba work to restore diplomatic and economic ties between the two countries. But as Eamon Javers reports now from Havana, big differences remain.
As U.S.-Cuban talks wind down here in Havana, both sides are making positive noises about what they accomplished here, but not citing any tangible results of the day of talks. Earlier today, Andrea Mitchell of NBC sat down with Josefina Vidal. She's the Cuban diplomat who's been sitting across from her U.S. counterpart through the week. She said that both sides are looking for common ground.
We believe that countries which have differences, they can find a common ground. To discuss about these differences with respect and at the same time to look for opportunities to work together on issues of common interest.
As for the United States, diplomats here are saying that Americans should be patient and not necessarily expect major change here on the island of Cuba.
We have had only a month since the presidents made their announcement, and we have only had the first conversation about how that policy will be implemented. So it's very hard to say exactly how this will work.
And in one of the most highly watched areas for U.S. businesses, Roberta Jacobson said it's not yet clear exactly how much telecommunications and technology equipment the Cubans will allow to be imported to the island. On the U.S. side, the new regulation signed last week will allow American companies to export technology to Cuba, but Roberta Jacobson said the Cubans haven't given them any indication yet of just how much of those imports they'll allow here. In Havana, I'm Eamon Javers for Nightly Business Report.
Still ahead, millions of families use 529 plans to save for college, but the president has a proposal to change them and could end up costing you.
Millions of families use 529 plans to save for college. One of the reasons those plans are so popular, tax savings. Currently, earnings are not taxed as long as the funds are used to pay for college expenses. But the president is proposing to eliminate that tax benefit. Today, White House Press Secretary Josh Earnest said the plan is part of bigger reforms.
Reforms that the president has proposed for the 529 program are reforms that he would consider only in the context of the other education reforms that he put forward. And when you consider that entire package of reforms, the tax cut that we're looking at for middle-class families is $50 billion.
John Harwood is in Washington with more on this proposal. And why is the president pushing this? This is a very popular instrument for people of all different economic brackets, John.
Well, the president is trying to target federal resources to the people that he thinks are most in need. So while curbing the tax benefits of these 529 plans, which the administration says 70% of the assets in those plans are held by people with incomes over $200,000 a year, he's dramatically increasing the tax credit up to $2,500 per student for families making less than $180,000 per year. So it's a matter of priorities and it's redistribution and to give money to a group that he thinks is more deserving. He's taking some from people who make more money.
Let's talk a little bit, if we can. It gets real murky real fast, or really into the weeds. But if I have an existing 529 plan, that portion would be segregated and not subject to tax on withdrawal for use in educational expenses. But any deposits I added to that existing account or any new accounts I would open would be?
Yes, it's new deposits. The earnings on deposits that are already in those accounts, and 7 million families have them, would continue to be tax exempt. It's the new deposits that would be subject to taxation.
And would those new deposits or those new accounts and withdrawals from them, I should say, would that be taxable to every single taxpayer or only to taxpayers above a certain income level?
To everybody. The administration is looking at this vehicle as one that is inefficient toward targeting federal resources, tax expenditures, to the people that the administration thinks are most in need of those benefits. So they're not distinguishing or means testing 529 plans themselves. They're simply shifting resources toward different vehicles, tax benefit vehicles.
So, John, what are the odds that this will get through Congress?
Low. Like the rest of the president's plan. Remember, the president's proposed $320 billion in tax increases, mostly on capital gains income through a higher rate, through taxing the appreciated value of inherited assets, as well as the financial fee that the president's imposing on large banks. This 529 proposal would only raise $1 billion, so it's a small fraction of their overall plan, which means two things. First of all, if any part of this plan goes through, it's very easy for the 529 part to fall away because it doesn't raise very much money, and also the people who hold those plans are politically influential.
John Harwood in Washington. John, thanks as always.
You bet.
Box makes a big splash in its trading debut called a big box. That's where we begin tonight's market focus. The cloud storage company priced its initial public offering $14 a share. That was above the expected range. The company, which has a market value now of about $1.5 billion, raised $175 million from that stock sale. The CEO explained what makes Box different from its competition.
What we do is we help manage corporate information, secure it, and then make it accessible on different devices, allow you to collaborate around it. And that's not really the focus of Google, which is much more consumer-oriented. But the most important point is we are kind of participating in a once-in-a-lifetime transition from on-premise computing to cloud computing.
When your stock goes up about 66% in a day, it's a good day. 23.23 was the close there. It was higher by $9. State Street reported earnings and revenue that easily topped Wall Street's estimates today. The investment firm's results were powered by the recent surge in volume and volatility in foreign currency markets. But investors focused on the outlook since the company said that a falling euro is cutting revenue from that region. Shares down 6% to 72.40.
Shares of GoPro got a lift after the National Hockey League announced a North American partnership with the action camera maker. Fans will now be able to watch hockey live from the player's perspective, which sounds totally cool. The deal is GoPro's first with a major pro sports league. The stock rose more than 8.5% to $52.51. Valero hiked its quarterly dividend by 45%. The payout is now 40 cents a share, which will be made to shareholders in March. The yield on that dividend is now 3.2%. The stock popped 4.5% to $50.16. And the farming equipment maker Deere is laying off more than 900 employees at plants in Iowa and Illinois. This is the company's latest round of job cuts, spurred by a drop in grain prices that's hurting demand for its machinery. Shares fell more than 1% to $88.35.
Our market monitor tonight is cautious on stocks, but says investors should be focused on yield and opportunities that will be coming in the energy sector. Channing Smith joins us now, co-portfolio manager and managing director with Capital Advisors. Channing, welcome. What makes you cautious?
Oh, I don't know if we're cautious. We don't see a bear market. We don't see a recession. And until really investors start to fear central bankers or lose confidence, we don't really see a big market downturn. We're just trying to be realistic. And if we look at valuation, that's what's really concerning us. So you look at the Schiller PE, which is a cyclically adjusted PE, which takes the average earnings of S&P companies over the last 10 years and divide that by market price, it's at 27. And we've only, in the 134-year history, been above this marker, so we're just not seeing a good valuation opportunity, Tyler.
So how are you finding opportunity? What are the metrics that you are using in a market that is either fully valued or slightly overvalued in some stocks in order to invest cash?
So we're really looking for dividend yield, and that's what we want to see. We only expect to see 4 to 6% annual returns really going for the next couple of years. And if we can find dividend stocks that are paying 4 to 6%, we're going to take that, but they're hard to find.
Let's look at a couple then, shall we, Channing? Starting with Wynn Resorts.
Yeah, so Wynn is really, we're looking hard to find opportunities. Wynn is a casino operator. About 30% of their business is in Las Vegas. About 70% is in Wynn. They've struggled really the last couple quarters. The stock's down about 40%. They've had trouble with visas. There's an anti-corruption campaign in China, so that's hurt their near-term results. But Tyler, they're paying over a 4% yield. They've paid a special dividend the last 6 years, and we think that they'll pay another dividend yield, special dividend yield at the end of the year. It's usually between $1 and $8, so you're looking at a potential yield between 5 and 10% for Wynn Resorts.
Next is a pick in the energy sector for a conservative investor, you say. Some people say ONEOK and some people say ONEOK, but that's the pick.
Yeah, so ONEOK is a way to play energy very conservatively. It's a 5.5% yield. They own pipelines, and they move natural gas. They move natural gas liquids all over the country, well run. They get paid for moving the product. So they do have some commodity exposure, but we think the dividend is very secure and is a way to play energy and get a 5% yield.
And Continental Resources is your third pick, more famous lately for the divorce of its CEO and founder.
Yeah, it's a riskier play. This is really a play on the commodity price itself. This stock was at 80. It's gone down to 30. It's about 43 or so and change today. If you believe that energy prices are going to be in that $60 to $70 price range, really about 6 to 12 months out, this stock has a lot of appreciation. They're very well positioned in the Bakken. They're very well positioned in Oklahoma and what's called the SCOOP play. We think production growth here is going to be enormous, and so it's a little bit riskier play. If oil prices go down in the near term, this stock is going to suffer. But over the long term, we really think that this stock has a lot of appreciation potential.
All right, Channing, thank you very much. Have a great weekend. Channing Smith with Capital Advisors.
Coming up, call it sneakernomics. We'll meet the teenager who's turning pricey collectible footwear into a business all his own.
A teenager and his sneakers sounds pretty typical, doesn't it? But not for one 16-year-old who, with the help of his father, amassed an enormous collection of high-end kicks worth about $30,000. Then he saw an opportunity and turned it into a growing business. Kate Rogers has the story.
Most teenagers spend the money they make at their after-school job on fast food, music, cool clothes, and shoes. And in a lot of ways, Chase Reed is no different.
So this is one of the biggest sneaker releases to me.
Only he's turned his passion for looking cool into his after-school job and more. At 14, Chase had amassed $30,000 worth of basketball sneakers. But last year, he sold his entire collection to open up the world's first sneaker pawn shop, Sneaker Pawn USA in Harlem.
Well, it was hard to let go of the collection because you're 14 years old with 200 pairs of sneakers, and now all of a sudden you have to go back to zero. It was like, well, this is not really fair. This can't be life. Like that's what I was looking at it as. Until I got older, I'm like, all right, it was really worth it. It was just part of becoming a young man and a business entrepreneur.
Like many 16-year-olds, Chase is hooked on Instagram, only his goal is to actually drive foot traffic here to Sneaker Pawn USA to see what he's got in store. So for example, these LeBron crown jewels, they retail for $250, but Chase and his dad, they're selling them for over $1,200.
All right, yeah, that's good.
His dad, Troy, also his business partner, says those social media posts drive hundreds of calls and customers to the store daily.
This is the new stock market. The markup on these sneakers is anywhere from 100 to 800%.
And industry experts say the hype around sneaker collecting is real. In fact, the NPD Group reports the basketball sneaker industry grew by 20% in 2014, with no signs of slowing down in the year to come. With idols like Bill Gates, Steve Jobs, and Jay-Z, Chase, who is just 16, has big plans for the future, hoping to open up more stores around the country.
If I do get a nice shoe in the store, I'll end up selling it, rather than collecting it. I'm a businessman now.
Chase has learned the art of letting go, looking cool, and making cash, all before he turns 18. For Nightly Business Report, I'm Kate Rogers.
To read more about Chase's profitable sneaker pawn shop, head to our website, nbr.com.
He's one to watch, I think. Finally tonight, the CEOs and celebrities that attend the World Economic Forum in Davos, Switzerland, are by no means strapped for cash. But the food prices in the tiny town are tough enough to really rile anybody's stomach. The price of a simple hot dog at a posh hotel is about 43 US dollars. Now, the frank does come topped with pickles and fried onions, but if you want to wash it down with a nice cold one, you better be prepared to dish out another $8.
Hot dog. My goodness.
Can you imagine putting that on your expense report?
We'll see some of them next week when those guys get back.
50 some odd bucks on a hot dog. All right, that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
I'm Tyler Matheson. Have a great weekend, everybody, and we will see you here on Monday.